This is the MTPredictor Weekly Update for May 6th. Well, we're going to take a look, among other things, we'll look at the Dow Mini, the S&P, and the NQ on the weekly charts. A little bit of a different picture. We'll see how this plays out. But remember, last time in the weekly market update, I was looking for some more potential upside ahead. Well, if we look, after that correction that we had, well, here is the weekly chart of the Dow Mini, and you can see, here was the correction, and I felt that that correction would be, a bit muted, somewhat similar to this here, because we had strength on the STF, this oscillator into the gray band at the top here, basically, during this period, telling us there was more upside ahead. So I felt this pullback, or that little correction that we had, would be shallow before we went on to new highs. Well, we got the shallow pullback in the Dow, and we made a new high last week in the Dow, up at 13,284 was the high, which took out all the previous highs. So mission accomplished there. You can see where the next level resistance areas are on the Dow up here. Those go back. These resistance areas come back all the way back to down 2008. And that area is sitting, it's just below the 13,500 area. We're looking around 13,430 is where that resistance will start. Now, if we look at the S&P. The S&P, remember, it came into our once it came into this decision point resistance area, back from the high of top of wave 1 before the crash of 08 into 09. We, at this point, when the S&P hit this area, that's when I said, we're looking for a potential correction, but because the STF was strong, expected it would be a shallow one, again, similar to maybe something like in here, maybe not even quite that, maybe something more like this. And we got our initial correction, then we rallied into earnings season, the Fed meeting, all that kind of came in that area. And then last week we sold off back down to kind of the starting point again. Strength coming off the STF. If we look at this on the daily chart now, this is what's interesting. Here's on the daily chart where we initially tested that resistance area. We'll call that potentially a significant high, or a significant swing high. And there's an initial correction. We rallied again into test that area again, and then fell off. Now, if we put our Elliott wave analysis on this, you can see this is looking at this. This could be potential wave 1 into wave 2, rather than just A, B, C, because this could be looked at a potential major swing high back here. So let's just project down wave 3, because this is a possibility now. And this is in the ES, because the ES is typically, the boss. So here's your typical wave 3. So if this ends up being wave 1 and this is wave 2, and instead of A, B, instead of getting a wave C in here, if this goes wave 3 down, that would take the ES down around 1300. So it's possible that scenario, because the ES is in that area, and the ES typically is the boss. That pattern's not looking like that in the NQ here. NQ is a little different. Hit its major resistance area here. It's pulled back. You can see where the wave 4, we've got a potential, we got wave 3 and potential wave 4 pulling back into this area. Strength on the STF. We could actually project up wave 5 at this point, just to see where those targets would come in on the NQ. So we'll see how this plays out. We could still get some more pullback here, even in the NQ. You see where the wave 5 targets are to the upside. We can get some more pullback into the wave 4 support before things turn around, especially if there's still strength on the STF. We would expect a pullback here similar to what we had, in this area, in the wave 1 into wave 2. You see the big wave 3, which tends to be the largest wave. That's why this is typically a good area to be a buyer in. So we'll see if we get a pullback here into wave 4. Maybe a little more continuation of Friday selling early in the week, then find support maybe in the middle of the week, and then rally by the end of the week. We'll see. But the YM did, we did get a new high in the YM, didn't in the ES, and you can see the picture here in the NQ. So we'll see how these follow up. Not a big, week. We've gotten a lot of the stuff out of the way as far as the Fed meeting. We got the options expiration out of the way, and some of the other news items. This week, probably Thursday is probably the bigger day with the jobless claims, and then PPI on Friday. So maybe some more important news coming on at the end of the week, and a little lighter early in the week. So maybe we see continuation of some selling early in the week, and then see if things kind of settle out, maybe kind of go sideways or bottom out, and then we'll see if we can rally into the end of the week. We'll see. Let's take a look around at some of the other markets here. Okay, so here's the weekly chart of oil. You can see this little prominent swing high here. If I put the Elliott waves on there, we had this maximum wave 5. We had a 5-wave pattern up here, and then we expect, when we go wave 5 up like this, we expect to get a correction back to this wave 4 DP into this area. We got that kind of a little double bottom here before this thing rallied, and you can see we're just kind of gone sideways. No clear, clean patterns here on the weekly chart at this point. If we go down to the daily chart, right, you can see the long signal that we had back here on oil that played out, that took us up to 104 and change, almost 104.80. Went basically to typical wave C before that corrected with this ABC, which this TS3 is here. Again, the bigger trend is blue, meaning the bigger trend is up. So this particular trade, if you were able to take this trade, hit the 100% initial risk line here, which means you move your stop up to break even. So when this thing sold off, you'd end up with a break even trade. Our standard traders wouldn't take this sell signal because of the blue STF, but you can see that it did play out to the downside. To the first target was 197, and it actually came down to this typical wave C support. So we should find some support. There'll be some more support if we take a decision point off of this last swing here around this typical wave 3 area. We'll see if that goes wave 3 down. This particular swing high here, let's see, there's an ABC pattern there. Let me put some more data on this chart because I just want to see that particular swing high. Just highlight this area here when I go to the weekly chart. Okay, that's this area here. It's gone a little beyond this resistance area on the weekly. Just looking to see if we could consider that a major swing high from the daily chart. It has taken out all the previous highs. You see the next one, that was where our wave 5 up was, is the next major resistance area up around the 125 area in oil. Your next support area here on the weekly chart going to be down just below 95. So we could continue to sell off into that area. We'll see. Just looking back at the daily chart here, you'll have when we put the analysis on this, it would coincide probably with that 95 area. This is around 93.50 area, the typical wave 3. Again, you've got more support in that area. So oil coming into some support here. If it sells off some more, we got some major support in this area as well, both on the weekly and daily charts. So watch that area for a potential bounce anyway. We'll see. And then let's take a look at gold on the weekly chart. Gold not as far as the weekly chart goes, we're still in that kind of buying area, below the 50 period moving average, the red line, above the 200 period. You can see the MT Predictor buy signal here. Right, the target there at 1902.80. This, I mean, if you actually took this trade, you'd have a break-even trade. We got to the 100% initial risk line and pull back to the entry. So, but I know a lot of professional buyers of gold that are like this area because we're below the 50 period and maybe rebuying. If we put the Elliott wave analysis on this, we're in wave 2 or B here. This would be look at it as an A, B, C pattern. Because this is not a, we wouldn't consider this a major swing low here. So we'll just look at this as an A, B, potential wave C up. In fact, we can project that. This next little up, wave C up move, which will be inside of this current one. So you see minimum wave C. It's around 1792.50 in gold. Now, if they take this TS3 out, you know, to the downside, where the stop is basically, if they take it out to the downside, then you know we could see the 200 weekly 200 period in gold, which would probably mean that silver, if we look at the silver chart, would probably go wave 3 down. And that's a possibility, but we don't put a lot of weight on the silver chart because it's a smaller market and it's not as well behaved as gold, if you will. But because of this major peak in silver, if you remember, you know, it was approaching that $50 level again. That was a major wave 5. This could be wave 1 into wave 2 here, and we could project wave 3 down. So it's a possibility, but like I said, the gold chart is going to carry more weight. Let's just go show you down what wave 3 down would put silver at down here, which would give you around $15 silver. But you see the pattern in silver here is on the weekly chart has the same basically setup as gold did. Again, ended up being a break-even trade there last week. Hit the stop there, which was at the entry. But it's also in this support area, this wave B support, so we could get wave C up. And I think that's probably the route we're going to go, but you know, that downside potential is there, so we'll see how that plays out. All right, so again, not a whole lot economic data wise and activity wise as far as the Fed. I think the Fed will speak this week, I think maybe on Thursday. I think that's in the morning, so that may slow things up, and then depending on what's said, you know, could get a reaction out of that. But other than that, you know, wait for the good setups, and we'll see what this summer brings. Sometimes we can have a real active summer, and sometimes it can be real quiet. We'll see what we get. Again, if we do get some type of major correction, always, you know, watch out for the sharp snapbacks, if you will, especially if QE3 is unleashed on the market. You know what that might do. So just keep your powder dry, wait for the good setups, always manage that risk. If you're interested in MTPredictor, it's an excellent way to keep your risk under control, get the reward side of the equation in your favor. And Steve Griffiths, the developer of MTPredictor, has just written a new document that you can get for free. It's just an introduction to MTPredictor. And if you can just go to mtpredictor.us, just enter your name and email here, click submit, and we'll send you the free PDF introduction to MTPredictor, and see how you can manage your initial risk, have your reward side of the equation at least two times the size of your initial risk, and do what the 95% traders that are failing can't do. And that's keep your losses small and let your winners run. Alright, hope that helps, and we'll be back to take a look at things next week. So have a good trading week, and we'll see you back then.